Okay, am I live? Can somebody please let me know if they can see me and hear me? Just let me know in the chat. Could you let me know if you see and hear me, please? Okay, thanks very much. I can see the message coming through now. Awesome stuff. Okay, so welcome to our weekly live stream. Today I am in a bit of in a change of venue, so I'm actually sitting at home. So yeah, just letting you know ahead of time there may be some noise in the background, but anyway, we're still gonna have fun in the session. So for this week, I thought we could go through an example today on just recording, kind of summing up what you did in recording. I just see there's a lot of sort of questions coming through, and I've just got this nice example that I think we can work through. Just in terms of announcements before we get started, so you will have seen that I sent out an email yesterday just regarding the process again for queries and so forth. So remember, any academic queries, please make sure that you post them in the forums and post them under the correct thread. It just helps us answer your queries much faster. Please don't email me any academic queries. I'm unfortunately not going to be able to respond because I've said this a million times before, and if you're not reading my announcements, then unfortunately I can't read your email. Okay, so yeah, please just make sure that you do post it in the forums. If you have technical issues, so if there's something that you can't view on Vula or whatever the case may be, please make sure that you contact the Vula help desk. And we're already having a breakdown over here. Sorry, my son is in the background having a little bit of an episode. But anyway, I'm back. Cool. Okay, so for this week, I thought we can chat about just the whole recording process, kind of pulling it together in a little example about closing off the ledgers. Okay, so closing entries effectively. So I've got this example and I'm going to share my screen now. So tell me, can you see the question that I've got up here? It says extract of trial balance for business A for 11 months. Just some sort of comment saying, yes, we can see the Excel. That would be great. Okay. Okay, I think people can see it. Okay, so I'm just going to get started. So I won't be able to view the comments, but I'm going to pause and then view the comments as I kind of go along. Okay, so here we've got a trial balance, or at least an extract of a trial balance of a business for 11 months ended the 28th of February 2021. Now, if we look at this extract over here, this is a pre-closing trial balance. Okay, and so this retained earnings over here would have been the retained earnings at the end of last year or at the beginning of this financial reporting period. And then during the month of March, there are 6 transactions that have taken place. So the way I tend to start with any accounting question is I start with a timeline. So on top here, I've just done a little fancy timeline here in Excel, but you don't need to be so fancy. Literally, you can just draw a line. So you'll have like one line, and you have the first day of the financial year, which is the 1st of April 2020, and the last day of the financial year, which is the 31st of March 2021. And the reason why we tend to do a timeline in accounting is because it just helps us frame ourselves for where we are in the year and what information we're looking at. And especially as you go through accounting and you're doing adjustments, which is going to be in a couple of weeks time when you start adjustments, it gets really tricky. And so it's really important that you understand where you are in the year when you're doing the recording and so forth. Okay, so what I've done here is I've just created general ledger accounts for the income expenses and assets equity accounts that we're going to see popping up, just to help me facilitate the the discussion process here so that it doesn't take up a lot of time. But some things that are important that I want you to note. So in this, you can see on the spreadsheet, I took away the grid lines because I want to show you what it would look like if you are doing this in your own question book, right? So I know a lot of students that have done accounting before, the prior students, you tend to like drawing lines. Prior students love lines. They got journal entries. They just got lines for days. Like, please, don't spend so much time doing a whole lot of lines. If you're doing a ledger account, all you need is a T. So here you can see there my T. Okay, all I needed for a ledger account is a T. I don't need anything else. If you're doing a journal entry, you don't need any lines. If you're doing any of your financial statements, you also don't need to do any lines. Like, just save yourself a whole lot of time. So I think to get started, we're just going to move the balances across. I just want to show you how I've done this, and then I'm just going to look to see if there's questions and then go on from there. Okay, so as a starting point, they've told us, okay, that these are the balances that we are dealing with. So all I did was I took these balances and I copied them over into these accounts. Now, you can see over here the sales. Let's look at sales, for example. So sales income was 560,000. So sales is on the credit side. So there I just have total income over there of 560,000. I've done the same for cost of sales. Then I just have total expenses of 195,000. I've done the same for electricity expense, wages expense. For the stationary asset, so that's a balance. Okay, because remember, assets, equity, and liabilities, those are balances. Okay, so I have a balance over there of 1,000 for the asset. The drawings, that's an equity account, so that's a balance as well. The balance is 25,000. And then I've just got to populate my retained earnings. So my retained earnings on the 1st of April 2020 was 450,000. So that is a credit balance. So it's 1 April 2020. Okay, it is balance brought down, and there I just forgot the amount, 450,000. Oh, my brain is working slowly today. I only got 4 hours of sleep, so yeah. Excuse me if you lose me at some point. Okay, just say in the comments you've completely lost us because you're just talking nonsense now because you need to go and sleep. Okay. Okay, so now I've put all my balances across, and now we're going to start looking at the transactions. And with the transactions, remember that these transactions, they would be recorded probably in your specialized journals, which you have done already, or in your general journal. But we're just going to put everything in the ledger accounts because I just think for the purpose of this example, it's nice to look at the ledger accounts, but I think it's an excellent example for you to go practice to see what these would look like in the journals, like what would the actual journal entries be for all of these transactions. Okay, so let's see if we've got any questions, comments. Okay, no, I think everybody is still with me. Great stuff. So, okay, for the first transaction, the business sold inventory with a cost of 2,600 for cash of 5,000. Okay, so if the business sold inventory, okay, so remember there's two things going on there. The customer then gave us cash of 5,000, so we need to record the cash of 5,000, and we gave up inventory of 2,600. Correct, yes. Okay, so let's start with Okay, so obviously the one side is going to be the bank account. So I didn't put a bank account here. I'm just going to leave the bank account for now, but let's do the sales side. Okay, so what's the date we're dealing with here? Okay, so we're just going to ignore dates for now. So there is a sale. The contra account over here is bank, and the sale was for 5,000. Okay, and then the second part of that transaction is to do the cost of sales. So the cost of sales, okay, the contra account would be inventory. It was 2,600, and then I don't have an inventory account here, so we're just gonna leave that for now. Okay, cool. Let me check if there's any questions. Uh, can I please leave the stream up? Yeah, all the streams are still available, so you can still access all the previous streams by using the links that I sent out. It's just that all the streams I've got on YouTube, I have them unlisted. But what I could actually do is I could just make them public, and then if you go to my channel, you should see all of the streams there. So what I'm going to do is I'm going to make these streams public. Let me make a note of that, and then it's easy for you to actually just access after this. Okay, public live stream. Okay. Okay, cool. Okay, then the second transaction, the business sold inventory with a cost of 5,300 for 9,000. So again, okay, so now we've got a sale. This sale was on credit. Okay, so if it's on credit, it means our customers still have to pay us for that. So we would record a trade receivable. It was 9,000. Okay, and then the cost of sales was 5,300. Okay, so the contra account there is again inventory, and it's 5,300. Okay, great stuff. Let me see if there's any questions. No, everybody's still following me. Awesome sauce. Okay, next one. The business paid for electricity already used 1,000. Okay, so if we go and look at where is my electricity expense? Okay, so here's my electricity expense, right? So up until this the beginning of this month, we had electricity expenses already of 50,000. Okay, but now we've used up more electricity expense, and the business has paid for it. So I think our contra over there is bank, and it's 1,000. Okay. Then we've got the wages. We paid wages of 2,500. So that again is bank, and it's 2,500 on the debit side. We debit wages, we credit the bank. Remember, debits and credits. I remember when I was a non-prior, this blew my mind for the good part of half of the course, because it's really tricky to understand what debit is. But simply, debit is increase in an asset, okay, decrease in a liability, increase in an expense, decrease in an income. If we are crediting, okay, so if we credit an income, it goes up. If we credit an expense, it goes down. If we credit an asset, it goes down. If we credit a liability, it goes up. If we credit equity, it goes up. Okay, so that's just, you kind of just have to internalize that. Okay, so you have to internalize accounting, and you've got to reflect on accounting. And once you do that, those things, debits and credits, are just going to become like second nature. I promise you, it does get better, but it's just practice, practice, practice. Okay, let's see if there's questions, because I'm just rambling over here. No, everybody's still with me. That is some great stuff. Okay, then this is the question that seems to trip a lot of people up. Okay, stationery on hand amounted to 200. Okay, so if we look at our stationery account, our stationery asset, at the beginning of the month, we so far had 1,000 Rand of stationery on hand. Now, if we come at the end of the month, okay, so this would be our, oh, sorry, over there, our balance carried down. Okay, if our balance carried down is 2000, okay, because that's telling us that at the end of the year now we actually have 200 of stationery on hand. That means that we must have used up stationery of 800. Okay, so that becomes our stationery expense. Okay, because we've used up. Now, in the question, we're never going to tell you, or it's highly unlikely we'll tell you what stationery expense is. We're always going to throw things in like this. Like we're just going to say, by the way, actually stationery on hand was this amount. And then you have to deduce from that that you actually used up stationery. Okay. Okay, so that stationery expense, we just have to debit our expense over here. So it's the stationery asset, and that's 800. Cool. I'm going to take questions after the last transaction. Then on the 31st of March, the owner took cash for personal use. Okay, so if the owner takes cash for personal use, that is an equity transaction. Okay, why is it not an expense? Why do we not recognize that in profit or loss? Okay, we don't recognize it in profit or loss because we're only going to recognize transactions in profit or loss that are not with the owners in their capacity as owners. So when the owner is taking money out of the business for personal use, okay, the owner is transacting with the business in their capacity as an owner. So that decrease is just a decrease in equity. It doesn't go through our profit or loss. So what was the drawings? Sorry, it was 6,000. Okay, so we've got 6,000 over there. Okay, it must be a debit, so we would credit the bank debit drawings. Okay, so it's cool beans. Okay, so now we've sorted out all of the transactions. Now, before we go and just close off all these accounts, let's see if there are any questions. Okay, so when it says on hand, we always assume that it is an expense for that particular account. Okay, yeah. So when something says on hand, it's telling you this is how much you have left. Okay, so let me do a practical example. I'm trying to see. Oh, hang on for me. Okay, I'm back. Okay, so what have I got over here? I think I must make my screen bigger so you can see what's going on here. Okay, what do I have over here? I've got 4 toys. Can you see that? Don't know if you can see, they're all different colors. Okay, now imagine that this was what I had at the beginning of the month, right? Now, if I tell you at the end of the month, this is the only toy we have left, okay? How much then did we get rid of? We must have gotten rid of the other 3. Okay, so it's the same with stationery on hand. At the beginning of the month, imagine this is the 1,000 stationery on hand. Oh, where's the camera? There's the camera. Okay, this is the 1,000. Then we get told at the end of the month, there's only 200. Okay, so then that means that we must have used up stationery of that. Okay, the 800 over there. Okay, so I like to have visual aids, and my kids, their toy box is like right next to me. So I hope that visual aid was exciting for you as it was for me. Sorry, I can be very weird sometimes. Anyway, moving on. Okay, so that's the whole thing with online. With on hand. If they tell you on hand, always think about, okay, well, if I've got this left and I had something different at the beginning, then I must have used up the difference. Okay. Let's go back to my my Excel screen. Okay, so Maybe I can keep that up there. Okay, so now what I've got to do is I have got to close off these accounts. Now, when it comes to closing off accounts, okay, we must remember that our assets, equity, and liabilities, those accounts are going to be balanced. Okay, now why are those accounts balanced? Okay, so think about the following. Okay, if it is the last day of the financial year, my toys are coming back. Okay, so let's say today is my financial year, in this case is the 31st of March. Okay, so I have my 4 toys on the 31st of March. Tomorrow, the 1st of April, right? If nothing happened to these toys, do I still have it the next day? Yes. Okay, unless these toys get sold or whatever the case may be, okay, I still have them. Now, it's the same with assets, equity, and liabilities. If your customer owes you money today, the last day of the year, the 31st of March, right? Then tomorrow, the 1st of April, if they haven't paid you, they still owe you, okay? It's the same with the liability. So you take out a loan from the bank. If you owe the bank on the 31st of March and you haven't paid them, guess what? The 1st of April, you still owe them the money, okay? So it's assets, equity, and liabilities. We're going to balance those accounts. Now, before I get to the income and expenses, I see I've got another question here. So the question says, what if it says on hand for inventory? Do we record it as a sale made or as an expense? So I'm not sure if you've dealt with an example of on hand with inventory before. I'm just trying to think, because the reason why I hesitate to answer that now is because we're going to be doing inventory in detail, and not this coming week 6. So I'm going to be teaching you inventory from start to finish. For 2 weeks we're going to deal with inventory, and I would really prefer if we actually have that discussion then. Okay, yeah, but if there is an example that you're specifically referring to, then rather alert me to it in the forums, and then I'll discuss it there. But if it can wait, okay, then I would say let's rather wait until we do inventory, and let's have that discussion there, because there's a couple of things that I need you to consider. Okay, I hope that helps for now. Okay, now let's get back to closing off accounts. Now, with our incomes and our expenses, these accounts we don't balance. Okay, so these accounts we close off to profit or loss. And the reason why we close these accounts off to profit or loss is for the following. Okay, so if you think about your financial year up here, okay, I've got my financial year. When I'm doing my financial statements, I am looking at a particular period. So let's say in this case, I'm looking at the financial year ended March 2021. Now, when I'm looking at this particular period, it means that I want to know what are the incomes and expenses for that entire period. Now, if I don't close off my sales income, cost of sales, and my other income and expenses, what happens next year? Okay, so next year when I get to the 1st of April 2021, last year's income and expenses is all going to be sitting in my general ledger. Okay, and then when I get to the end of March 2022 and I want to do my reporting, it's just going to be a mess, because then I have not only 2022's expenses, but also the expenses from March 2021. Okay, so I don't want to do that. I only want to look at the income and expenses for a particular period. And for that reason, we then must close off our income and our expense accounts. Okay, so let's get crack-a-lacking with this. Okay, so now we're going to get to balancing these things. Now, full disclosure, I haven't balanced an account in, I think, more than a year. So let's do this. Okay, so if I remember this correctly, okay, we're going to sum that. Okay, and I'm going to move it over there. Oh, no, I'll just don't want to link these cells now. Okay, so it's going to be 31,000. Okay, so then my drawings. Okay, so where does my drawings go off? where does my drawings go? Now, drawings is an equity account. Okay, so we said that we balance equity accounts. However, drawings is an exception because drawings gets closed off to retained earnings. Okay, because when we look in our financial statements and we're looking at the column which is called retained earnings means this is all the profits that the business generated minus what the owner took out. So in order to reflect the retained earnings correctly, we actually have to close off drawings to our retained earnings. So we will close this off to retained earnings. Okay, so I can go up here because I need to debit retained earnings. So I will say drawings 31,000. Okay, and now my drawings account is done. How's about my stationary asset? I've already balanced that one, so there's nothing to balance there. With my stationary expense, okay, there's only one expense over there, so I'll just do like a little border at the bottom there, just do that, and then I'll say it's 800, and that 800 must go to profit or loss. Okay, so I'm going to take that expense to profit or loss. So where's profit or loss? It's up here. It's up there, sorry. So I have credited my expense. I must debit profit or loss. So that is my stationary expense 800. Okay, cool beans. Next one, wages. Okay, what is going on here with wages? Okay, I've got to add this up. So that's 38,500, and then 38,500 gets closed off to, let's just copy that because I'm a bit lazy, profit or loss. Okay, so then I go to profit or loss, and I've got my wages expense. Expense, what was that amount now? See, I can't even remember these numbers. Eyes. Okay, cool. So I'm just going to do the others, and then I'm going to check the questions again. Okay, so let's do sales income. Okay, so equals the sum. Okay, it's 574. Okay, 574. And that would be profit or loss. Okay, and so I have debited my sales income, so I must credit profit or loss. Okay, sales income, it's just that over there. Then I've got to do the same for cost of sales. Okay, equals 202,900. That is profit or loss. Okay, I have credited my cost of sales, so I must debit my profit or loss. Cost of sales expense, that is equals that over there. And then I've got my electricity expense. Okay, so my electricity expense is 51,000. And that is profit or loss, 51,000. So I have credited my electricity expense. I must debit profit or loss. Electricity expense. Where is that? 51,000. Okay, let's just link those cells. Okay, Awesome sauce. Now, before I close off and balance my profit or loss and retained earnings, let's see if there are any questions. No. Oh, also just on the inventory thing. So remember, any inventory on hand, that's just going to affect cost of sales. Yeah, so if your inventory gets used up, or gets sold at least, you're just going to recognize cost of sales. But like I said, we're going to discuss inventory in a lot more detail in 2 weeks' time. No questions so far. Okay. I want to. Okay, cool. Now I've got my profit or loss. Okay, so I need to now close off profit or loss. Now, profit or loss is an equity account, but profit or loss gets closed off. Okay, the reason why it gets closed off, because like I said, it needs to go to retained earnings. Because when we're preparing our financial statements, we are going to report what our retained earnings is, and retained earnings, it's all the profits we've made throughout the history of the business, less any amounts that we had paid out, okay, to our owners. So let's sorry, close this off. Let's see. Okay, and I'm just going to copy that. Okay, so which side is bigger? The credit side is bigger, so I've got a balancing figure over here. Okay, retained earnings. So that equals that minus the sum of that. Okay, so there I have. Let me just do this. Make it look extra fancy. Okay, so what have I done now? I've taken my profit or loss. Okay, in my profit or loss, I closed off all my individual income and expense accounts and I gathered it in profit or loss. Then I have to close off my profit or loss account and I need to take the profit or loss, the either the profit I've made or the loss that I've made. I need to close that off to retained earnings. Why? Because like I said, in our financial statements we're going to be reporting retained earnings, and retained earnings just means all the profits the business has made less the drawings that was taken out. Okay, so we have 280,000 over 800 over there. So that is a debit in profit or loss, which means we have credited retained earnings, so it goes on the credit side over there, and it is coming from profit or loss, and that equals 280, 800. Okay, so now that I've got my profit or loss parked in my retained earnings, what can I do? I can go and balance this account. So let me just copy that over there. Okay, equals sum. Okay, so it's 730, 800. And the credit side is bigger, so I've got my balance over here. So that is balance, what is that? Carried down. Yes, balance carried down. And that is going to be, okay, it will be that. Oopsie. Mommy's busy. Shh. Sorry. It's going to be the, let's just work this out. It's going to be, oops, sorry, equals that. Oopsie, minus that. Okay, so that gives us 699,800. Cool. Okay, so now we have our retained earnings that has been balanced, and we can see that our retained earnings has now increased. Why? Because we generated this nice profit. We only took a small portion out, but retained earnings has increased. Okay, this over here, this means that our we're obviously going to take this over here, so we'll have a balance brought down. over here, the first day of the next financial year, which is what's our year? It's 1 April, April 2021, and it's going to be that amount over there. Okay, so there I've done the ledgers. I want to take this just a step further just to see what is the impact overall on the financials, but I'm first going to check if there are any questions. Okay. Is deferred income slash earnings also appropriate in terms of income received in advance? Okay. Now, deferred income. Okay, deferred income, I think that term is appropriate. However, we would prefer if you call it income received in advance. Okay, yeah, so you may be familiar with that term from before, but I would prefer if you just use income received in advance. The reason why I say that is because as you progress in your studies, in your accounting studies, okay, there are certain things that we just have certain names for, and so if you read in the accounting standards, it talks about income received in advance and not deferred income. So not to confuse yourself later on, it's best to just use the term income received in advance. Deferred earnings, I don't know what that means. I don't think it's the same as deferred income because, yeah, I've never heard of the term deferred earnings. So I think, yeah, my answer is just use the term income received in advance, please. And brackets L. Okay. Are there any other questions? Okay. If we pay a deposit when ordering inventory, do we debit it to deposit or can we debit trade receivables? Good question. So, if you debit, remember when you pay a deposit, okay, let's think about the principle. The principle here is that you have paid the supplier of inventory a certain amount, okay, and that amount is for that supplier of inventory to give you inventory in the future. Now, until they actually give you the inventory, that is effectively an asset, okay. So we know that we need to debit an asset. That's the first point of call. It must be an asset. Now, what do we call that asset? Now, so far in your lecture examples, we've used the term deposit asset, and we quite like that term. The reason why we don't use the term trade receivables is because trade receivables refers to amounts that you are meant to receive from your customers who purchased on credit. Okay, so that's very different to you paying a deposit. Now, practically, if a business pays a deposit, right, that deposit asset, if you look at financial statements, so I know that you have all looked at least one set of financial statements. Okay, so if you look at a set of financial statements, you're not going to see deposit asset on there because it's probably going to be grouped in with other receivables. And then you would see on the financial statements trade and other receivables. But I think for the purposes of this course, let's just call it a deposit asset, and let's leave that for when we are paying deposits. And if we are receiving or if we have amounts that we've purchased, we our customers have purchased on credit, we will call that trade receivables. Okay, let's stick to that convention. Anything else? Oh, no other questions. Okay, so let's just take a step back. Okay, what have we done? We've now closed off these accounts. Okay, so let's think about what the impact is going to be on the financial statements. Okay, so if we go to, let me just do like a blank page over here. Okay, so if we think about the statement of financial position. Okay, let's increase the font, and I like that one. Okay, if we think about the statement of financial position and the income statement, okay, and the statement of changes in equity. Let me just delete that. Okay. Okay, so let's think about these three statements, right? What we've done in the solution, right? How does this pull through into our financial statements? Okay, so if we think of retained earnings, what is going to happen to this retained earnings balance over here? The retained earnings balance, well, number one, we're going to see it in the statement of financial position. Okay, so under equity, we would have retained earnings. Okay. Where is it? Okay, we're going to have retained earnings of just under 700,000. Okay, so that's a retained earnings that we're going to see over there. Where else is retained earnings going to appear? Well, it's going to be in the statement of changes in equity. So we're going to have a column called retained earnings. Let's just okay, do that. Okay, so we're going to have a column called retained earnings. Let's do like a little, and that side. Okay, so we're going to have a retained earnings. So we would have our balance at the beginning of the year was the 1st of March 2020. So our opening balance would be that one there. Okay. Let's just format that. And then at the end of the year, we're going to have our closing, our balance at no, sorry, oh, that's not March, that's April, isn't it? My bad. And that's not how you spell April. Okay. Okay. Then it's going to be the balance at the 31st of March 2021. Okay, so that's going to be that one over there. Okay, so that's our balance that we're going to see over there. What else is going to happen? Okay, so our profit or loss, if we look at our income statement, okay, in our income statement, we're going to have all our incomes, okay, and we're going to have all our expenses, and then we're going to have net profit for the year. Let's do that. Let's just delete that so you can see everything. Okay, so our net profit for the year is going to equal that, right? Okay, so that's going to be our net profit for the year. Also, where else is that profit figure going to appear? It's going to appear in our statement of changes in equity. Okay, so we're going to have profit for the year. It's going to equal that amount. And then, of course, there will be the drawings and so forth. Okay, so just from these two accounts over there, the profit or loss and the retained earnings. Okay, remember, we close off profit or loss to retained earnings. Retained earnings then gets balanced. Then we're going to pull those numbers through to our financial statements. Where do we see them in the financial statements? Firstly, statement of financial position, we see our retained earnings under equity, okay, because the statement of financial position is our snapshot, okay, of all our assets, equity, and liabilities at a particular point in time. But we've also got this other statement, which is really cool, the statement of changes in equity. This one actually tells us, well, how did your retained earnings go from 450 last year to just under 700,000 this year? Like, what happened? Right? So the statement of changes in equity attempts to explain why equity in the statement of financial position has changed. Okay, so you're going to include that detail over there. Then our other amount, profit or loss, where is that? That is in the income statement. So in the income statement, we have our net profit that we calculate for the period. Okay, because the income statement is trying to show the business's financial performance over a particular period, in this case, a year. And once we have shown the users of the financial statement what a lovely profit we made during the year, we can then close off that profit and go and park it in retained earnings. And here in retained earnings, okay, in the statement of changes in equity, we're going to keep it there for the future. Okay, so let's say in the future we want to, we're the owners of the business, we want to take out drawings, then we can do so, right? We've parked all our previous profits there. Okay, let's say there's a pandemic that hits in the future and the whole world is locked down and we need, to keep our business going. We can draw on our reserves if that were ever to happen. Now you know why we have retained earnings. Okay, so let me take some questions. Okay, so the creditors and debtors control accounts won't apply. The creditors and debtors control accounts, those accounts are for when you are doing your creditors and your debtors. You will do that when you do debtors and creditors reconciliations. Yeah, so we are going to touch on that again later in the year, and then you will do that there. Basically, what those accounts are doing is they are kind of gathering the information of, well, the amounts that are due from our debtors and the amounts that we owe to our creditors, and all the information gets sort of summarized there, and then those amounts get posted to our general ledger, to trade receivables and to trade payables respectively. Okay, any other questions? Okay, so okay, so there are no additional questions. I think I hope this was useful for you to just go through this example. I'd like to do more sort of things like this, but it's just time becomes a problem. But yeah, let's see as the term goes along if we can get more of these types of sessions going. If you have ideas for questions that I can cover in the live stream, go and post them on the forum. So just create a thread there saying a topic that you want me to discuss in the live streams, and then I'll see if I can find an example, and then we can take it from there. Yeah, so thank you very much for joining me on this Thursday afternoon, and I will see you next week. Yes, next week. Okay, so yeah, all the best with the content for the rest of the week. I hope you're working through that conceptual framework stuff. Okay, it's not easy stuff. Accounting's getting interesting now. And yeah, don't forget your digital tat coming out tomorrow and your weekly quiz. And don't forget to check your weekly quiz on Friday. Just check that you have access and just immediately post something in the forums if you don't have access. Because I have been missing some messages come through, but it's like, yeah, just please, just as soon as you can, just make sure on Friday that you do check that. Even if you don't do the quiz on Friday, just check that you have it on Friday. Okay, cool. Yeah, thanks very much, and I will see you around, and I'll make all the other live streams public right now. Cool. Bye, everyone.